Okay. In happy little accounting land.
No.
Right? We're happy and we're in accounting land?
I don't know if it's a happy part.
We're in a happy accounting land. Remember, you're happy? Chapter 13. In happy accounting land, we are looking at journalizing payment of payroll. Yesterday, when I talked about my intro for this chapter, I talked about in chapter 12, we really went through and journalized, or we didn't journalize anything. All we did is just figure out what each employee made. Now, in section 13.1 yesterday, we really looked at how do we journalize a payroll register. Total earnings is going to equal which account that we would debit? Salary expense, okay? Your net pay column would equal what account? Cash. I jumped to the end, okay? Now, all of your deductions are going to be a liability because you owe that to whomever. If it was health insurance, you owe it to the health insurance company. If it is U.S. savings bonds, you owe it to U.S. savings bonds payable. The tricky one is your federal income tax. When we went through and calculated our federal income tax, we had to look in that tax table, and the column says federal income tax withheld. But our account title is actually employee income tax payable. So that one is the one that's the most different. Now, also yesterday when I introduced the chapter, I talked about the fact that employers have to pay taxes because they have employees. And that's what we're going to be looking at in section 2. We have 4 taxes an employer has to pay. Okay? We have Social Security tax. Okay? You pay Social Security, they take it out of your account, and you will always see that on your pay stub, how much money went out for Social Security. And you also pay Medicare. Oftentimes when you look at your actual pay stub, it's not going to say Social Security Medicare, it may be combined together and it would say FICA tax. But basically FICA is Social Security and Medicare. Those 2 taxes an employer has to pay. So what does that mean? If you paid $50, the employer has to pay $50 also. So an employer will go through at the end of the payroll pay period and look at it and say, okay, my employees had to pay $1,030 in Social Security. Employer has to pay $1,030 also. Same thing for Medicare. It's matching. Whatever the employees pay, the employer has to pay. But we have to watch out for that tax base. And the tax base is going to come into play on this example. We may have 3 employees that have not met the tax base, but we may have 7 that have met it. So then we have to go through and calculate it, and I'll show you how to do that. Our 2 other taxes that an employer has to pay is unemployment tax federal, unemployment tax state. Does anyone know somebody that's collected unemployment tax before? Or unemployment benefits? Okay. Do you know where do they get their money from? The state of Wisconsin or Washington, D.C.?
D.C.
Don't know?
I think it's out in Wisconsin.
We are actually, when you file for unemployment, for example, my husband worked at the golf course industry for a long time, and he couldn't work there in January and February in Wisconsin. Does that make sense? Okay. So he was eligible for unemployment benefits because his job did not pay him at that time of year, so he would file for unemployment. And he would get paychecks, and those paychecks would come from the state of Wisconsin. Okay? It's an important concept. So when we want to go through and calculate things, you want to realize that the Wisconsin is the one that's giving the benefits back to the worker, not Washington, D.C. Washington, D.C. gets money to help organize and manage the whole unemployment, but the people that actually give the money out is going to be the state of Wisconsin. Now, I don't work in July and August, and even part of June. Do I get unemployment?
No. Salary.
But I'm salaried only for a certain number of days.
But you know,
Do you know what I mean? My husband got benefits.
but you're the school. That's easy.
See what I'm talking about? If I worked at the golf course and I picked up range balls 3 nights a week, do I get unemployment benefits in the winter time? Why not? I am not full-time. So I have that part of it. I am not eligible for unemployment benefits in the summer. I'm a contracted employee, and I am not eligible because my contract, I have a contract now for next year stating I'm going to work so many days, they're going to pay me X amount of dollars, and then I have certain days that I want to work. If I wanted to earn additional funds in the summer, I could get a part-time job. Okay? I do not. A slacker. The whole month of July, I try to do no work at all. I work in June and I work in August, but I don't work in July.
What do you work?
School stuff. I do presentations, I do FBLA, bank concessions. No bank. I used to Google it. So I am not eligible for unemployment benefits, but people are. For example, if I decided today that I didn't want to work anymore and I quit, and you have a different teacher on Monday,
I would cry.
Josh would cry. Do I get unemployment benefits?
No.
Why not?
Because you chose.
I quit. What if Mr. Miller came in and said, Mrs. Grasso, you're fired, and you get a new teacher on Monday?
You get bonus.
I get unemployment benefits because it wasn't my decision to leave. The employer is the one that fired me, so therefore I would be eligible for unemployment benefits. Okay, so that's just a little bit about unemployment. I'm not going to get into a whole big spiel on it, but just for you to understand a little bit about it. We are going to go through and calculate that. We have 2 unemployment taxes, federal and state. Okay, always remember the state amount needs to be larger than the federal because of the decimal point in there. A lot of times people put it into the calculator incorrectly and then it throws the other things off. Okay? So if you don't have 13.2 work together and on your own, open. Get there. I'm waiting for you. Okay. Our instructions. Payroll information taken from the employee earnings record is given below. A form and general journals are provided below. Your instructor, me, is going to guide you through the following example. Aren't you excited? I'm going to guide you through the following example. Unbelievable. Okay, Mothy is going to guide you through the following example.
Yeah.
Ready for Mothy to teach you?
Read what it says.
Good luck on the test. All right. We have 2 employees. We have Tamla Beltran and Irma Cintron. And you will notice that we have accumulated earnings of $5,100 and $7,350. And then you have your total earnings for the May 1st through 15th pay period. And calculate the amount of earnings subject to unemployment taxes. Unemployment taxes are owed on the first $7,000 of earnings on each employee. So, notice there's a tax base. Very similar to Social Security for unemployment. That tax base is $7,000. Have either one of these employees earned more than $7,000?
Yes.
Irma has, correct? So do we have to pay unemployment tax on Irma's earnings? No. Do we on Tamala? Yes. Okay. Have either one of them exceeded the tax base for Social Security? No. $87,000? No. Okay. So what we need to do is they have this nice little table up here. Now, Tamla Beltran, her accumulated earnings were $5,100. Her total earnings from May 1st to the 15th was $637.50. How much of her earnings from May 1st to the 15th do I have to pay taxes on? I think I heard it.
All of it.
All of it. So unemployment tax earnings, I'm going to put in $637.50. Okay, so Irma, how much taxes do I have to pay for Irma for unemployment?
0.
0. Okay, Now, I need to total up my total earnings and my unemployment earnings. So I'm going to go through and I'm going to add 637.50 plus 920. So my total earnings for the May 1st through 15th payroll should be $1,557.50. My unemployment tax earnings totals is going to be $637.50. Got that?
Yeah.
So why did I do this? This is the important part. This is going to be the one that's going to hurt your brain. This is the hardest part of the chapter. Okay? What we just did is we calculated how much money that we have to pay taxes on for unemployment and how much money we have to pay taxes on for Social Security and Medicare. We already determined nobody has exceeded the tax base for Social Security and Medicare. Okay? So, for Social Security and Medicare, we're going to take $1,557.50 and use that as the base to multiply by our percents. Unemployment. We can't use $1,557.50 because Irma has already gone over 7,000. So for calculating our unemployment taxes, we are only going to use $637.50. So right here on this table down below, you will notice Social Security tax payable, 6.2%. What am I going to multiply by 6.2%? Which one of these two totals? Total earnings? $1,557.50. So, to calculate Social Security, I'm going to take $1,557.50 and multiply it by 6.2%, and then that number will go right here. I will do the same thing for Medicare. I'm going to take $1,557.50 and multiply that by 1.45%, and then that number will go there on the right. Don't forget to round. Do you agree with my numbers?
Of course.
You didn't even look. Sometimes I make a mistake. I try hard not to, but I do make mistakes. I am human. Jose does not.
You should double check.
He's going back to Canada.
Going back to Canada? Get owed to here.
Okay, now, what do I need to do for unemployment tax payable federal and state?
Take
637.50, and I'm going to multiply. Now, please look. This is where we make ah-ahs, ooh-oohs, and boo-boos. Okay? 0.8%. You have to move that decimal places 2 to the left. Don't put in 8%. It has to be 0.008. This needs to be a small number. Okay? 0.8%. So you're going to put in your calculator 637.50. You're going to multiply that by 0.008. And I got $5.10. You concur? I'm going to take 637.50, and now I'm going to multiply that by my unemployment tax rate for state, which is set at 5.4%. So to put that in my calculator, it's going to be 0.054, correct? And that's going to be $34.43. Now, what I need you to always remember is federal is smaller than state. Notice that my federal one here is $5 and my state one is $34. If your federal is ever bigger, you know that you miscalculated. I just need you to remember that because that's often a mistake. Now, what we need to do is we're going to add up and give us our total payroll taxes. I got 158.68. Oh, yay! Now, 5868 is the amount of taxes an employer has to pay because we have employees. Okay? We have an expense account related to that, and that's going to be payroll taxes expense. These are taxes we have to pay because we pay payroll, which is why it's called payroll taxes expense. So when we journalize this, it is really important for Applia that you have the accounts in this order, that you are going to do first Social Security, then Medicare, then federal, and then state unemployment. So that the order that they're listed up there above is going to be what's there. But we know that those are all taxes that we owe. Those are going to be liabilities. We owe more of it, so they're going to need to be credited. We are going to need to first debit my expense. Okay? So let's go ahead and put the date in there. The date is going to be May 15th. Got that from the directions. And I'm going to do payroll taxes expense. My source document is going to be M46. And payroll taxes expense is going to be debited 158.68. Hi, Nikki. Then I need to go through and do all of my taxes. Social Security tax payable is going to be a credit of 96.57. Medicare tax payable is going to be a credit of 22.58. Then my next account is a little bit different. It's going to be unemployment tax payable federal for 510, and then it's going to be unemployment tax payable state. Watch that you choose the correct one. And I have a happy green circle because I did it all right. Anyone else? Dealer? Dealer? You guys should watch that movie this weekend. Anyone going to Iron Man 3 today? Take that as a big...
I decided to sleep in. Is Gordon going?
No, that's too scary for Gordon.
I don't think it's going to be good. What?
Why not with that?
Too many of them.
There's been two.
I haven't seen it.
It's Trace.
It's too many.
Trace.
All right, work on your own. On your own is not that difficult, but I want you to try it. On your own. Come on. You can do it.
We don't know how.
You can do it. Don't just click on check answer and fill it in until it's right either, Evan.
You clicked it. You took my mouse and clicked it.
All right. Let's take a look at application 2. Eyes up here.
Sarah.
Sarah.
Slap him.
Sarah.
Like the bus ride.
There.
We were all just calling your name.
Yeah, like Sarah.
Okay. This looks very similar to what you did on your own, correct? Okay. What you'll notice is there are more employees. The big thing that I need you to realize is we are doing 2 pay periods. What you don't have is you don't have accumulated earnings right here. How do you calculate accumulated earnings?
Net loss plus.
Add those two.
Accumulated earnings plus total earnings is going to give you this accumulated earnings. And you need to do that for every person, no matter if they've earned more than $7,000 or not. This number here under accumulated earnings is always going to be accumulated earnings March 31st plus total earnings April 1st through 15. We'll give you this number. Now, have any of these employees earned more than the tax base for unemployment?
Yeah.
Who?
Carl.
Teresa has, correct. So how much are we going to need to pay for unemployment tax for Teresa? 0. Look at Ian.
He's not off by one.
He will be.
How much are we going to pay tax on for Ian? $100. Only $100. Because we only pay up to $7,000. So when we look at Ian Schmidt here, his accumulated earnings is $690. His total earnings is going to be $1,150, but we only tax up to $7,000. So right here, it's only going to be $100. And then are we going to have any tax for Ian on the next one? No. Okay. And I think that's it. I don't know if you have another one that's close.
Oh, you only do it to the closed ones? Or you do it to all of them?
Well, you'd have to do all of them, but I don't think any other ones are getting close for when you go over here.
Oh.
So you are going to go through, this is going to be where you calculate your first one, your first payroll tax, and this will be your second payroll tax. Don't forget your federal unemployment is the 0.08%, so you have to put in your calculator as 0.008. Go forth, have fun, and calculate your payroll taxes. It's Friday.
Why do you put 100? Why don't you